Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. If you're new to the channel, I run a popular investor portfolio on eToro, and we're going to be talking about one of the new positions that I've taken out in the portfolio today, which is Petrobras. Before we get into it, if you haven't already liked and subscribed, I would greatly appreciate you doing that. Helps me out with the YouTube algorithm, as you know. So, without further ado, we're going to talk about the latest position in the portfolio, Petróleo Brasileiro, Petrobras, and let's get into it. So, for the eToro portfolio that I run, we're looking for a good collection of value investments, okay? So we're looking for a core portfolio of high-quality businesses as we define by this criteria. The investment formula that we use at Crassus Investments is that we're looking for assets with low debt, high margin of safety, sales growth, strong margins, free cash flow growth, and a history, if not an ability, to buy back shares. If we can get those, then we're starting to look a little closely at the asset. Some quick facts on Petrobras. A humongous producer in an emerging market, obviously being Brazil. Revenue is expected to come in at $95 billion. All of these are in US dollars. Okay, so compounding 5% over the last 5 years, and looking to continue to compound at 5.4% over the next 5 years. EBITDA 47.2 expected in 2022, with the next 5 years compounded at 12% year on year, which is very, very strong growth for such a large company. Market cap at time of recording, 84.5 billion, with the enterprise value, a little bit of debt on the business, not a heap, but there is some there, 136.9 billion. The price at time of recording, $14.29 if you're looking at the US ticker. 13 billion shares outstanding. Not a heap of buybacks in the company's history. They tend to pay out shareholders by way of dividends. Okay, so 19 billion paid out in dividends, which was around about a 90% yield with the average price over the last 12 months. So if you were in the stock, you were getting a great dividend yield. Obviously, along with all the other oil majors and producers, the company sold off heavily due to COVID and is now flying high on the back of the recent strong moves in oil. Return on capital, last 12 months, 26%. Net debt to EBITDA is around the 1 time. So they are able to service their debt and will continue to be able to do so, given my thesis on oil over the next at least 5 years, if not 10 years. So the key points, going to keep it super simple. It's a simple enough business. It's a fully integrated oil and gas company. So they don't just drill, they don't just produce, they don't just refine. They're all the way from A to Z. Very similar to, in a way, to how Cenovus is structured at the moment in the Canadian oil and sand space. So Cenovus then merged with Husky. So they are the biggest producer refiner in Canada, if I'm not mistaken. There are other bigger producers, but they don't have the refiner capacity. It's funny, someone a couple of months ago left a comment asking for my thoughts on the company, Petrobras, and I said, I like it. I've been watching it very closely. I decided to move more towards North America first, and now it seems with everything that's playing out, I simply had a lot of exposure into energy. And so with everything that's playing out, I'm far more comfortable reaching down towards the emerging markets, such as Brazil, with a quality producer such as Petrobras. So they have, as I said, an A to Z integrated company. They're onshore and offshore. They've got a fleet of 130 different vessels that they can use, not only for drilling, but transportation. So it's a really, really interesting play. Yes, I probably should have entered it a little bit earlier, but I had other energy plays. We had we still have Transocean. We did have Oventive, which we sold at a great profit. And perhaps instead of going into the Permian and the US-based producers, I may have reached out the risk curve a little further and gone to Brazil. But that's not to say that things couldn't have gone awry and gone the other way. We still made great profit. We're holding Cenovus still, and it's been one of our best performers. So you never know. So they sell not only domestically in Brazil, but internationally. And you've just seen Joe Biden come back from crawling to the Venezuelans, asking for them to bring on production. We've got talks about coming into terms with reducing sanctions on Iran in term or in terms of reducing the sanctions on their oil so that we can get more oil, because due to the disastrous policies that we've seen around the world, supply for oil and gas or hydrocarbon energy has just been crushed. And we are really, really in a very weak position strategically, economically, developmentally, and in terms of national security based on such silly policies. In any case, a company, what that means for Petrobras is that the demand will likely fall to them. They've got a huge amount of proven and probable reserves. They're sitting on a ton of different hydrocarbons, and so they'll start to export a hell of a lot more. So they'll be able to gain more hard currency into the company and into the country, and a lot of their overheads will be paid out in the weaker currency, okay, the Brazilian real. So if you're hiring Brazilian workers, you can pay them in real. If you have inflation throughout Brazil, which seems to be very common, if not almost permanent by now, then you have also an arbitrage in terms of the hard currency that you're earning and then the softer currency through which you're paying your expenses. With everything that we've seen, as sad as it is recently, that actually stands to benefit a company like Petrobras. So I said to myself upon exiting Ferrexpo and Gazprom, because Ferrexpo's ceased operations and Gazprom, of course, I'm not allowed to own it as a Westerner. I said, okay, well, you take the supply that these particular companies produce, you take that out of the equation, the demand for those particular commodities is really going to soar. Who's that next step in the ripple effects? I talk a lot about first, second, and third order thinking. So I said, okay, well, who is next in line to supply the energy that we need? Who is kind of in our good books in terms of the US or the Westerners, and that can produce the same kind of volume in terms of oil and gas. And Petrobras is just the answer. So Brazil is on better terms with the US. They're on reasonably good terms with most nations around the world, and so it will save the US a lot more face if they start to strike a deal with Brazil. Okay, very telling that the guys have come back from Venezuela, and it appears that the Venezuelans aren't interested. That's a topic for another day. So with everything that's going on, the onus now really falls upon Brazil. It falls upon Petrobras, given that the United States don't seem to be interested in reopening the Keystone pipeline. So very, very interesting to see what happens. I think that people still are underestimating the demand pressures that will be on companies outside of the green energy crew, who will be relied upon really to supply the hydrocarbons that we need. Developed economies' fantasy of eliminating oil fuels is a massive opportunity for emerging market producers, and I think Petrobras is probably the pick of the bunch, given that we have to wipe out all of our ideas about Russia and Eastern Europe. Let's take a look at the share price over the last 2 decades. Here you can see the previous oil bull market reaching up to 2008, and the recession hit. And then we had a little bit of volatility through there, a lot of dilution in terms of the share count. And here we are today. Actually took this picture before I made the recording. And so we're at $13 on this chart, $14 at time of recording. And so it's interesting to see that over the last 12 months, you've seen this steady kind of grind up higher along with oil prices, which is exactly what we would expect. If you look at the valuations on this company, they just are insanely cheap, looking at their forward 12-month multiples. So if we look at the ones that I'm often interested in, it's enterprise value to EBITDA, 2.92 times 2022's EBITDA. So, I mean, dirt cheap. Market cap to free cash flow, 3 times. And if you're looking at the analyst expectations of the free cash flow, and if you're looking at enterprise value to free cash flow, you add back in the cash and you're looking at 2.88. So if we take free cash flow for 2022, expected to be roughly 24 billion, plus the cash at the bank, 10.4 billion, that's about 40% of the current market cap. Okay, so you've got cash plus this year's expected free cash flow, a large amount of which will be given out as a dividend. You're looking at almost half the price that you're paying today will be given back to you within a year, which is obviously insane value. Risk factors, and it's not without risks. Brazil, Brazil is a huge risk. Okay, there's corruption, the taxes. They've already had a deal negotiated with the government that they want to give a donation in the I believe it was approximately 2.5% of revenues and social rents, etc. So this is something that you will absolutely see with the commodity producers moving forwards. They're the easiest targets. They have to stay in business because everyone needs them, which means that they're a guaranteed source of revenue, and governments just can't help themselves. They have to reach in and steal what they can. So be aware of that. Currency exchange, depending on variabilities, that can be a good thing or it can also be a bad thing. Okay, there's a huge amount of currency risk with the real, and so you'll need to really keep that in mind when thinking about Petrobras. If we talk about these particular risks and break them down, so the president of Brazil, Jair Bolsonaro, has, he's at least had a go at cleaning up some of the corruption. So he actually fired the CEO of the company last year, I believe, and put in a new one. In terms of a meso or macroeconomic picture, he will not interfere or nationalize the company, which is a huge sigh of relief for investors. This is what he said, okay? So, it's not impossible. It could happen. All I can go off is what he said. He wants to reduce fraud at the company as best he can. I don't know. Maybe he can, maybe he can't. Maybe he's part of the fraud. I don't know. Who knows? But it is interesting. He seems to be towing a fairly hard line to a lot of things that are happening in his country. So if he's genuine, then that's great. That's a great thing. He wants the country to stop importing diesel, which is a good idea. He thinks that Petrobras and other local companies can ramp up production to make enough for the whole country. It's a good idea in theory. Hopefully it works. I don't know about that. Brazil's got a history of trying to use what they have to become almost a closed economy. It hasn't worked very well, for example, when they've used sugar into the ethanol production, which has obviously things swing both ways. If you have a bad crop, you can have sky high fuel prices, or you can have decent fuel prices and people starving because you can't get the sugar. So I don't know about that. It may be possible. It's not a bad idea if the engineers in Brazil can pull it off, but it remains to be seen. And he wants Petrobras to drill more oil. Now, that is absolutely fine at the moment because we have all these guys in North America and other places around the world that have said that they're not interested in making the same mistake as 2015 in terms of the shale and fracking boom, where you had this debt binge and everyone was just trying to increase production. Surprise, surprise. We had an oversupply in the market and the commodity price started to fall and we had a cascading effect to the downside. Petrobras can probably go really, really hard in terms of increasing their production and capex because no one else is doing it and we all need the oil. If Russian oil is offline and unavailable to the West, and so is that of Iran and Venezuela, if we can't come to terms with those guys, Petrobras will probably need to be the producer that steps it up. So if we look out to the very start of 2023, it's actually the end of 2022's numbers that I've used in this table, broken down to at least for now, a per share basis and assuming no change in share count. We're looking at $1.85, $3.62 and $3.91 for free cash flow, EBITDA per share and earnings per share, respectively. These are the multiples that I have used. These are the multiples that Eric Nuttall is using in his fund, the 9 Point Energy Fund. I think it's a reasonable assumption. The thesis is that if your investment from a cash flow basis stands on its own, then using these very, very basic multiples, then the downside will really be taken out of the picture and the upside will take care of itself, meaning that if the market wakes up and starts to re-rate these stocks, obviously we'll get a massive improvement on the upside. So instead of paying a 6 times multiple, if the market is happy to get a 10% free cash flow yield, which in low interest rate environment would be pretty good, then obviously you'll see the implied price go from $11 and change to $18.50 in this particular case. So worth keeping in mind. As you guys know, if you've been watching the videos, I keep these very conservative. And if the investment cash flows and stands on its own two legs from that perspective, a market re-rating to the positive is just further gravy for us. So an equally weighted average suggests a target price of just shy of $19. And there's strong arguments to say that that's very conservative, given that we have inflation adjusted input prices that will need to be passed on. Okay, so with a huge producer like Petrobras, I would assume they can start to pass that on rather than have that eat away at their margins, but it is a risk that needs to be considered. Taking the share price at today's date and looking out into the future, if we extrapolate the EBITDA on a per share basis, growing at just that base case, okay, that I've used, discounted at the company's cost of capital, we're still looking at an IRR of around 33%, which is obviously phenomenal. If you believe this to be true, and these are only my numbers, okay, it's just my opinion, my projection, they could be completely wrong. Having said that, I have to draw a line somewhere. If I take the share price today and I extrapolate out the free cash flows using the same methods, discounting at the same average cost of capital, the free cash flow model suggests an IRR of 26.3%, which again is very, very healthy. To further explain that, here's a model that I like to use. I take EBITDA, free cash flow, and earnings per share, and I extrapolate that out over a decade. I use a base case, a bull case, and a bear case, and adjust the growth and the terminal multiples accordingly. Okay, so you can see what I have used for the EBITDA case here, and the discount rate when looking in this particular model is my required rate of return of 20%. Okay, so I want to get 20% year on in as an average for a minimum risk premium for me to want to invest in a given company. I assign a probability, we get a present value, and then the sum of that present value gives us an intrinsic value. So intrinsic value is suggested to be around $24.70 if you want to, or if I believe this is true and that I want to get a 20% IRR. To add a further margin of safety of 33%, you'd be wanting to buy the company below $16.30. Obviously, we have the opportunity to buy the company today at $14, so you need to work out if that's something that you do your own numbers and decide if it's a risk that you wish to take. Bear in mind, there's a lot of risk in this company. Me personally, I can only speak for myself and for the funds that I manage. I have taken a position in Petrobras, and I will be continuing to build as the verdict suggests. So what I'm doing personally is I'm accumulating into this stock. I expect a lot of volatility. One, because it's a commodity producer. Two, because there's a lot of volatility in commodities at the moment. Three, because it's an emerging market. Four, because it's Brazil. And five, because of the lots of other unknown risks out there. But at the end of the day, my reasoning, and it's only for me, as I always say, I'm really paying such low multiples of free cash flow. If free cash flow were to drop for some unknown reason, which I find highly unlikely given the current scenario, over the next 12 months, we'd still be fine, okay? And so for me, it's a company with low enough debt. It does have a margin of safety, and it needs to have a huge margin of safety given the risks. It has sales growth and strong margins, free cash flow growth. Not so much share buybacks, but the company chooses to pay out the shareholders more via dividends. I'd be aiming for a position of around 3% of assets under management, which is quite heavy. For those of you who follow the portfolio already, you'll know that we invested in StoneCo. We still hold the position in StoneCo. It is a Brazilian financial services company, and we've seen some massive volatility. And that is the reason why I kept the position to 1 to 1.5% max of assets under management, simply because of the unknown risks. Petrobras, 3% I believe is appropriate. We have 5% in Synovus, which is supposedly a better corporate governance in Canada. Even that's up for debate at the moment. And we have exposure to Transocean, which is essentially like a call option on oil and gas once day rates start to clear. $450,000 a day US. So that's the reasoning. Everything looks really good on paper, but these producers always look good when their PEs are low, and that's often a trick. However, given the macro environment, given the fact that I just don't think there is the supply out there, I think supply is extremely tight. I'm willing to take a position. We're going to cap the risk at 3%, and I think that the cash flow will certainly start to pay off over time. Thanks for watching. If you haven't already liked and subscribed, I would appreciate you doing that. Leave a comment. I really enjoy reading the comments. You get fantastic comments on this channel. And if you're interested in taking a look at the portfolio, download eToro, click on the link in the description, and then you can add us to a watch list. Or if you've got funds that you want to invest and you're ready to go, obviously you just use the copy function and you're good to go. However, having said that, this is a disclaimer. I'm not a financial advisor. I don't know your circumstance, so please do your own due diligence. None of this is advice. Please don't mistake it as advice. How can it be? I don't know you, but it's just my opinion on what I'm doing and what I'm doing with the funds that I manage. So you're responsible for the decisions that you make. Don't try and blame anyone else, and do take it seriously. Having said that, I hope you enjoyed the video.